we are now live for our Daily Rates Live show. Today we are going to be talking about, as usual, some non-QM loan programs. I'm joined here today with Kyle Hiersche, our COO, Jose Gonzalez, our sales manager, and we will go through a couple different standard scenarios like we do every day for all of our pricing to show the daily live rates. And then in a little bit, we'll have Jose go over some detailed analyses on our asset utilization. Is going to be the topic for today, which is a special kind of non-QM loan program that just uses the assets and does not require any employment or income. We use the assets to then determine a monthly income figure that we can then get a debt to income from. So let me go ahead and get started with the regular stuff today. So again, my name is Nick Hiersche. I am the president and founder of The Mortgage Calculator. We are a lender that specializes in non-QM loan programs. And today we'll go through all of the different rate options we have for kind of our standard stuff, as we do conventional non-QM as well as FHA, VA, and USDA. So we usually start the show going through some basic scenarios. So let me go ahead and share my screen with our pricing tool. So this tool is for our mortgage professionals. So please get with one of our licensed loan officers. We're licensed in 16 different states for primary second homes, and we can do some of our non-QM business purpose loans in pretty much every state for business purpose. So this tool is just going to give us some rate indications for today. Now that rates have been posted since about 11 a.m. here where I am on the East Coast, rates are all set up for pretty much all of our programs. So we can go ahead and check out what we have today. So we're always going to typically start out with a ADLTV scenario. We're typically always going to shoot for a desired price of 99. That means we're going to have one discount point of cost here. That's typically the request from our clients in this higher rate environment. They're going to want to have an option to buy down the rate a little bit, whether it's a small amount of buy down or there's even some large temporary 2-to-1 buy downs that people are talking about. We can do those as well. But just for today, we'll just set up a pretty simple scenario. We're going to start with a conforming loan. Again, we here at the Mortgage Calculator, we specialize in expanded, aka non-QM, as well as offer FHA, VA, and USDA as well. But today we're going to pull up a conforming loan. We're going to do a purchase 30-year fixed for all of our different scenarios. We're going to start with primary, single family, and Florida, Miami-Dade. That's where our office is based. And for all of our scenarios, we'll use a 760 estimated FICO and an estimated debt to income ratio of 40, just so everything stays the same throughout all of our different scenarios here. So we'll go ahead and check out what we have this morning to offer. Oh, you can see this tool is live, so I actually have to pass a security check since we're actually getting live rates. And here we go. So the first thing that pops up, if a customer or borrower is eligible, we do have some specialty programs. This is a Home Ready and Home Possible. Those are the different programs for borrowers that qualify under typically an area median income. So those are a little bit specialty options. Let's scroll down to the standard options. So the standard conforming 30-year fixed option we have here, the best scenario for this morning, I think it's the same as it was yesterday, I believe, 6.125 rate for just under one discount point in cost. So our pricing system said this was the best scenario for that specific program. And then you see we have a few different other programs as well, more Home Possible options and other 30-year fixed options. So those are great options for our standard borrowers that qualify under a standard conforming program. Now, if a borrower does not qualify under the standard Fannie Mae or Freddie Mac programs, then instead of doing conforming, we come down here to FHA, which is the second most popular program. A lot of people are very familiar with FHA. There's a lot of great things about FHA loans that allow borrowers who maybe aren't able to qualify under standard platform to then still get a home. So we'll still set up everything else the same, 99 price, so we'll get 1 point in buy down, purchase, 30-year fixed, primary. Everything else is going to stay the same here. And we'll check out what our FHA rates are for this morning. So it looks here, the computer found the best option, FHA 30-year fixed, 5.5 rate for about just under 1 point in cost. One thing to consider on FHA always is there are additional costs for FHA for the monthly mortgage insurance and the upfront mortgage insurance. So there is a larger APR. So in order to compare FHA to everything else, the rate is great always, but just make sure you check the APR because there are some extra costs involved. So now let's go ahead and check out what we have available for borrowers who aren't able to qualify conventional FHA. That's typically where most lenders will get stuck, and that's where we specialize. So there are options, obviously, for VA if a borrower qualifies, if they've served in the armed forces and do qualify for a VA loan. That is amazing. Not everybody qualifies, though. We appreciate everybody who does and their service, but we can price those with our loan officers. Please get with them. And USDA, remember, is a specialty program for rural housing. So that is only for homes that are in a specialty area. So if your area you're looking in is a rural area, please get with one of our loan officers and quote you up USDA. But typically our options are conforming, FHA, and then if you work with another lender, you may not have other options. But we have what we call expanded guidelines, aka non-QM. These are the types of loans that we love here at the Mortgage Calculator. All of our loan officers are trained to do non-QM loans. So these are some of our specialties. So in order to set this up the same as all the other scenarios, we'll pull up an ADLTV using expanded this time. Everything else will stay the same. But you see here, now we can change our income type. So we can use alternative income verification under these non-QM programs. So instead of full doc, which is what all conforming and FHA programs have to qualify with, we can go with alt doc, asset related, which Jose is going to talk about in detail here in a minute. I'll go through a detailed quote on that. We have business bank statements, 12, 24 months, the most popular. We have our investor DSCR products, which are our most popular products. We'll talk about those in a minute. And our most popular option for a primary borrower, self-employed, someone that's self-employed typically will use their personal 12 months of bank statements to qualify under our non-QM programs. So I'm going to check the self-employed box here because you must be self-employed to use these bank statement options. These are people in the gig economy, stuff like that, Uber. Also, a lot of our realtor partners, obviously, they're typically self-employed, and they typically maybe don't qualify under standard programs. So we're able to use our personal bank statements for 12 months, or a P&L program is actually even more popular for our realtor partners. And we're going to use those bank statements or the P&L to determine a debt-to-income ratio. So in this case, we use the 12 months of bank statements for this hypothetical borrower to determine that they can have a debt-to-income ratio of 40 and qualify for these alternative loan products. So let's check out these options that we have available today. So there's a lot of variation here in the non-QM space. We have a lot of different partners and places we work with under these programs, so a lot of different programs and options. So please get with one of our loan officers, and they can navigate all the different options we have. You can see here, this is a pretty hefty cost, so I probably wouldn't recommend this bank statement option. This is a 4.5% cost, probably wouldn't even qualify. So let's skip down here to the most reasonable option, which would be a standard 30-year fixed, 8.125 rate. Obviously, the rate is higher, but remember, these are for borrowers who wouldn't qualify under any other circumstances. And that's for one discount point here. You see, we have a ton of other alternative documentation, bank statement programs available, and the rates do vary. So there are a lot of options out there. Please get with one of our loan officers so they can dig through all these options and find the best for you. Also, on these non-QM programs, I always want to touch on some of these other options that you'll see with higher rates maybe have other things to them. So these programs may allow credit events such as a bankruptcy, short sale, foreclosure, other things like that. So a lot of these other buckets that we have that maybe look like a little higher rate do allow borrowers who would never qualify for a loan to then qualify. So that's what's so amazing about these non-QM programs is they just open up the options for someone who would otherwise not be able to qualify to purchase their dream home. So if you're a realtor out there or another loan officer or your borrower, these options are amazing if you've ever been denied under a standard program. So now on the show, always, we want to check the rates every morning. And the next thing we want to go to are options for investments. Obviously, second home's popular, but we won't do that this morning. We'll go through a couple scenarios for investment properties. So if we pull up our slider for an ADLTV purchase, so 20% down, 80% loan. Again, we're going to pull up a 1 point and buy down is what our request is. We're going to try to find the best combo to just buy down a little bit, which most of our borrowers are wanting to buy it down. And we will do purchase, and instead of conforming, we will do expanded. Actually, we'll start with conforming, sorry. Under investment, we haven't done conforming yet. And we'll do purchase, 30-year fixed. Everything else will stay the same, 760 FICO, 40 DTI. and we can check out what we have available for investment properties. Please keep in mind, you see these big numbers here. These are a little scary sometimes. That's because Fannie Mae and Freddie Mac added a large adjustment, a large, what we would call basically a penalty to an investment property. So they do offer conforming loans still. We can still offer conforming loans under Fannie Mae and Freddie Mac both, but they do have a large amount of cost now. So great rates, obviously. The conforming rates are obviously a little bit better than what we see on the non-QM side. But there are large costs. So you don't really see any options here for low buy down. So it looks like this is the lowest option we have for discount points at 2.5 discount points. So those are just kind of things that have happened in the last year in the market, right? These are government-sponsored entities. These are Fannie Mae large entities. These aren't us as the lender. These are just kind of penalties they've added because they want to reduce the amount of investment properties they have that they're doing loans for. So this is typically where we have a borrower saying, hey, I don't want to pay that many discount points, especially investors that are trying to save cash to buy more investment properties. So a lot of times, that's where our beautiful non-QM programs come in handy. So if we come back here to the quick pricer and pull up the alternative for our borrowers that actually want to pay no more than 1 point in discount points and buy down, they want to keep the cash in their pocket and they want to take a higher rate in order to keep their cash in their pocket. So a lot of our investors are still going for this. Remember, this is going to be for an investment property, expanded guidelines, 30-year fixed, everything's going to stay the same. For our income documentation, we can use a few different options. So we can use assets, as we mentioned, 1 year alt doc, 2 year alt doc, even go full doc on an investment property if we really wanted to. Bank statements, but our most popular request actually doesn't require any income at all. So the DSCR loan is debt service coverage ratio, is what it stands for. That allows our investors to purchase this investment property without providing any income documentation or any employment information of any kind. So we don't actually need any income verification. We're going to use the property rental income or proposed rental income, in this case for a purchase, in order to qualify that property and that loan. So this is a great option for our borrowers also who want to save cash in their pocket, because you'll see there'll be some great options here, a little bit higher rates, but as long as the property cash flows, we can still make that purchase happen. Another thing here on the investment properties, when we're under expanded, we always add a prepayment penalty. We obviously can have no prepayment penalty. That is always an option. That's no problem. But our standard pricing is always going to have a 3-year to have the best rates and terms. If you want to have no prepayment, it's going to cost a little bit more. And if you want a higher prepayment, you can actually save a little bit. But our standard pricing typically is always going to have a 3-year. That's pretty standard for DSCR loans in this space. So this is a typical scenario we're going to set up for an ADLTV purchase, 20% down. And you see here, for less than 1 discount point, the rate is 8.25. So you saw the rates in the high 6s and 7s for conventional, which is great. But the rate's just a little bit higher here on the DSCR. And these programs are being requested daily and being taken over conforming loans for borrowers who even would qualify. So they do love to use this, especially when they can purchase multiple properties, save some cash in their pocket. We also do have some 85 LTV options, so 15% down options for the DSCR. So this one is amazing for investors that are looking to build up their rental property portfolio. You see we have dozens of options here. Again, all of these vary with the DSCR ratio, with, as I mentioned, credit events, foreclosures. A lot of investors do have sometimes different credit events or lower credit. So we have a ton of options available. Please get with our team so they can kind of navigate through here. But the best one today, looking like an 8.25 rate for just under 1 discount point in buy down. So that is what we are going to go through today for that. Let me go ahead and stop sharing the live rates, and I'm going to go ahead and pass it over to Jose here in a second. And he actually, just before we started here, he pulled some quotes. So same rates that we were just pulling, but he has a full detailed quote broken down for a few different asset related scenarios. So as I mentioned on the pricer there, one of the options we have for any non-QM, whether it's investment or a primary home, or for an asset related program where the borrower doesn't necessarily have to have employment or income, we use their assets to determine a debt to income ratio and reduce their assets over time in order to make that loan payment. So Jose, let me have you explain a little bit more about that, and then I'll pull up your examples here for you.
How's everybody doing? Jose Gonzalez here, 27-year veteran, MLO and real estate agent. Today we have a nice little treat for you. We keep wanting to come up with outside the box solutions for our team, right? So the one that we're discussing today is asset depletion or asset utilization, depending on which investor we are submitting the file. They're going to have different names for it, but it all boils down to using the borrower's liquid assets as income. Now there are multiple formulas for it. Some, using 60 months, some using 48 months, divided by this, divided by that. So, we would have to refer to the specific guidelines of where we're sending that loan to confirm. But the main point is that it has to be assets in an account. Can't be sitting at home, can't be jewelry, can't be fine art, can't be paid off fancy sports cars. It has to be liquid assets. So, Nick, if you could, here we go. So now we're talking about here now primary purchase, 80% loan to value, again, using the assets. So note that we have pretty good rates here considering this does not use, this is basically a primary purchase that is not verifying any employment, right? No job. Now there is income, but the income is being derived via the formula where we're using their assets and dividing by a constant, right? So here we have 8.625 is actually giving us a lender credit, and 8.5 is the little bit same in reverse, or there's a cost. You can buy it as down as low as 7.5%, and if we do the math in points, I'll give that figure to you in 1 second. So do a little quick division here. So that's 3.5 points, more or less. I think that's probably going to be really close to the, or possibly a little bit above the 5% points and fees limit on a primary residence on a non-QM loan. So again, very good option, primary purchase, 80% loan to value. So now I'm going to discuss the investment property purchase, asset utilization. You'll note the rates here a little bit higher, not much higher. You're looking at 9.125, giving us a $500 lender credit, and then you can buy it down as low as 7.625. Not much of a difference. That's actually a little bit lower. That's probably like somewhere around 3.25 for this rate, which again, no job verification. The required income verification for a primary or second home is being obtained via asset utilization and or asset depletion. So we're staying totally within the constraints of the Dodd-Frank Act. It is a primary or second home where we are verifying income. It's just not income in the traditional sense of the word. So now it gets really good because we can even do investment purchase on this one as well. Now this one, you will note almost pretty much the same rates we're talking about here. Again, 9.125 to 7.625 in the buy down. Same product, same process. And now we go to the primary.
You want to do the refi?
Yeah, we want to do the refi. Yes, sir. Refi, primary asset utilization. Again, pretty good rates, right? We're looking at a quarter that looks to be, that's like a quarter point fee at 8.75. That's the lowest cost, to more or less about roughly 2.75 points at a 7.625. Again, very good options for your borrower that has good liquid assets. And then final one, we're going to talk about is refi investment asset utilization. Now, obviously, this one little bit higher rate because it's 80%. No job, just verifying off of assets, but we can still go 3/4 of a point will get us 10.375, and down to 3 points will get us 8.999. Again, no job verification required, just running their assets via the formula to arrive at their monthly income figure that we're going to use. So if you have your borrower that has substantial assets in stocks, bonds, savings, checking, anything like that, 401k, retirement. I know a few people that have, a couple $1,000,000 in a retirement account. They've been saving money for 30, 40 years. And now all of a sudden, they're about to retire and they're like, man, we want to move to that nice condo on the beach in Miami Beach or Fort Myers or Naples or somewhere nice like that where it's nice and warm and sunny, but I'm only on Social Security income. Well, that's okay. You got $2 million in an IRA. We're going to run that through the formula for asset depletion or asset utilization. I'm sure we're going to come up with a nice amount of monthly income that we can attribute to this. They can get their condo. They got plenty of money, so they can give the 20% down, and away we go. They're happy, we're happy, everybody's happy. So again, another amazing outside the box solution provided by the mortgage calculator for its team to utilize and for its borrowers to be able to obtain the home of their dreams.
Beautiful. Thank you, sir. So next, I'll pass it over to Kyle. He'll just explain a little bit more about how to connect with our team and a little bit more about us.
Yeah, absolutely. So if you're working with one of our loan officers already, that's great. If not, you can get in touch with us by going to the website, themortgagecalculator.com, which is actually right here. And you could also email us, info@themortgagecalculator.com, so we can pair you up with one of our loan officers. Now, I do want to make note, you see all these special programs we have, right? These are the things that we specialize in, as Jose said, finding things outside of the box. So just know that our loan officers here at the Mortgage Calculator are loan consultants. They can help you with not only conventional FHA, VA, USDA, like most loan officers can, but they take it to the next level, which most loan officers do not, by being able to consult you and guide you through these out-of-the-box programs that we offer. All of these non-QM loans, the DSCR investment property, which is definitely our most popular loan right now for no income, no job verification investment properties, and the asset utilization, which we just went over here, which again does not verify employment. So get with one of our loan officers. They can consult you through the process and go over all of the different programs we have, and they can send you quotes instantly, real quotes, just as Jose was going over, with real rates pulled right then. Any of our loan officers can send you one of those quotes for the different programs that you're looking at. So either get with your loan officer or go ahead and contact us at the website below, themortgagecalculator.com. And we hope to work with you all soon. Everybody have a great day. Thank you for tuning in. We will see you tomorrow, same time, 11 a.m. Eastern time, to go over the rates for tomorrow live. So take care, everyone. Have a good day.
Thank you.